following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Shawn in Canada. Hey, Shawn, what's going on?
Hey, Tom, how's it going, brother?
It's going great, man. How you doing?
I'm a huge fan of the show. I just found out about you guys within the last month and a half.
Okay.
And I can't believe, I'm like, where did these guys come from?
How did you find out about us?
Sometimes I'll go in the search engine and try to find some market analysis.
Okay, man. Welcome to the Tiger family. Appreciate you growling and prowling with us, man.
Yeah, man. I really appreciate you guys, and I'm just excited to watch your bids. I get a lot out of them. I really love the intros you do and the excitement and the energy, and you guys are pretty special.
Well, we get a great network, man, and there's a lot of diversity, man, and we're really lucky. Thank you so much for calling, man.
Thanks, buddy.
Thanks, Shawn. Have a great one. Have a safe one.
You too, bud.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. A believer is an optimist who thinks of tomorrow. Duke Ellington. Market-wise, let's take a look at it out here. We have the Dow Industrials up 31, Nasdaq down 23, S&P's up 550, gold contract up $18.30, trading at $1,253 an ounce. Silver up 72 cents at $16.97 an ounce. Platinum up 37 bucks at $1,015 an ounce. Copper up 6 pennies at $2.22 a pound. Light sweet crude up $1.25, trading at $42.44 a barrel. Bonds, the 10-year note down 5 ticks, 130.11. 30-year bond off 11 ticks, 165.01. King dollar down 520 ticks, traded at 93.94. The euro is up 62, trading at $1.13, and the yen is up 30, trading at $1.09. Our phone number is 877-927-6648. Give us a call, folks. Well, I know what's going on in your world. The world of the S&Ps, let's take a look at them. What do you have? Okay, so if we go over to the cash, what you have is this. We're at 2,099. You've got to 2104 out here today. 2104 is, what a mind blower this is. So check this out, folks. This is going to be a trip watching this thing shake out. So 2104.27 is the high of December 2nd. We got to 2104.05. So the bottom line is that we'll see whether this is the test inside the S&Ps. My take is that the NDX 100 is topped out, but we'll see how this shakes out. Now, if we go back to the 2nd of December, what we're going to look for there is we're going to say, okay, what is the volume characteristic on December 2nd? And on December 2nd, we're dealing with, 954 million. So thus far, it looks that we'll have lighter volume, and that, on a subtle basis, would be the test. So we'll see where that shakes out after 4 o'clock, meaning does it stay where we are right now in that cash, or get lower, and does it have lighter volume there? If it does, that's the test. Now, let's go over to the NDX 100. The NDX 100, bottom line, you're coming lower, and you have a huge volume expansion. Now, this is really subtle, and this is what it is. You're only 85 cents down, which is not a big deal, okay, in the Qs. You're at $110.37. What you have, though, and this is, they are getting out the door as fast as they can right now. We've already done 26.8 million shares. The highs, just to give you an idea of the last, days up here, we did 25 million shares when we went topside on the 13th. You got higher with 17 million shares. Yesterday we did 17 million. You can see what's happening here. They're pushing it out, and we have 50 minutes left. They will push out some volume in the next 50 minutes inside the NDX 100. If we go over and we take a look at the future contract, what you're going to see in the futures is this. We're at 45.28 inside the NDX 100. We've had the wide price spread out here today, and thus far, It looks, this thing's going to want to close out somewhere, I suspect, down to about 45.17. Right now, you're 45.29. Reason I'm saying that is the high volume low at 45.17. We just got another nice piece of information, and that was the sell that was done at 3 o'clock. Someone's pushing in. They just pushed in 5,400 contracts as it popped down into the 45.22 area. Now you're getting a little counter trend bounce, and that is coming in with lighter volume. Gold contract. What do we have with gold? Bottom line, gold wants higher price. You got the wide price spread. You get the volume, all of the above. What you have out here is that right now we're up 18 bucks. You've done 205,000 contracts. You're coming into 157,000. Your swing point is 1264. Right now we're 1252. More than likely you'll see this baby go right after it tomorrow. And I suspect we're going to go up into the 1287. We'll see whether they can blow away that 1287. The way that some of the equities are trading, it looks like it's going to blow away that 1287. Silver, you talk about catching a bid. Silver caught a bid, all right. So silver, you get 104,000 contracts. You're up 72 cents. This is no doubt a trip. This started 2 o'clock in the morning last night. If we take this and you put this on a continuous contract, what you're going to see is this. We're at 16.95. We bring this back, and the amount of selling, the amount of the supply line was absolutely huge, folks, at the $16 level. Each and every time it kept coming up there, they were selling into the market, never could make it. Well, bottom line, it's not only made it, it basically took it apart. And it looks to me like it's going to take no prisoners, and we're going to be at 1770 in about a heartbeat in 1849. That's the way this thing is set up right now. So I expect you're going to see that. More than likely, we're going to see it as a follow-through. Now, where are we going to go? We're going to go over to the dollar index, because the dollar index, folks, has been making its way down to this 92.50 mark. We're at 93, 92 right now. You're coming into the lowest swing point. The lowest swing point out here that we're talking about is 93.62. And right now, you're at 93.92. If this closes here, which I expect it's going to be overnight. It's probably going to be tomorrow morning. That's where you're going to probably jump the creek. It's a small creek, but what you do have, and this is what is putting the juice behind the commodities in a big way, is that this dollar wants to go lower. When you take a look at all the commodities out here today, natural gas is up 6.8%. Silver's up 4.4. Beans are up. The soybeans are up 3.3. Gasoline 2.9. Copper 2.3. Lean hogs 1.4. The only commodities that are highly tradable that are down is that you have orange juice down 1.7%, sugar's off 0.7%, and live cattle's down 0.5%. So there's real juice inside that commodity market. I expect that is going to continue. Notes. Let's go take a look at the note market. What we have with notes, the 10-year note right now, trading out at down 5 ticks, 966,000 contracts traded. It's going to go after the swing low. We'll see how it handles that swing low. That's 130.6. It looks to me like this baby wants to run down to about the 128 mark. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow right now is up 48. Nasdaq is down 19. S&Ps are up 7. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's go take a look at the GLD, Street Tracks Trust. So the Street Tracks Trust, folks, trading up $1.85. As one of our targets says, it has volume in it. You're coming after a swing point. Volume out here is 16.2 million. The swing point you're going after is the $120.34 at 9 million. So yeah, it wants to get up into that. And I suspect it's going to go make the run of 122.37. The question about adding to this here, though, I would say no. I mean, I would say that if you're positioned, great. I mean, you know, I wouldn't be adding at highs. That's not my take on how you get these things done. You buy retracements, and the bottom line is, yeah, I wouldn't. If you're not in this market or you're already in it, don't add up at these highs. When you do the math, folks, at adding the highs, the market only has to pull back a small amount to basically get into the, a negative aspect like ASAP. Yeah, you're getting greedy. That's he says the target's that I'm in. I'm getting greedy. Yeah, stop getting greedy. You should be thinking of peeling more out. That's, you know, I wouldn't, you know, depending on how many equities you own, that's where your head should be running right now. SLV. We go take a look at the SLV. What you have with the SLV is this. SLV monster move. Okay, so check this out. The SLV, we're at $16.25. Now, this is pretty cool because you can take the top of $15.60. You take the bottom of 8 of 13. And we got, what? That's $2.50. That's 7. That's $18.10. That's where it looks it's going to go. Silver, this is what's going to be really wild here, man. Oh, so check the, okay, so what you have is this. This, yeah, 17, yeah, this is running to 1769 in a heartbeat, man. You know, silver doesn't have, the next time silver has any flack, even the SLV is up at the 18 bucks. That's where this thing is shaking out here. And I suspect what we have, it's about this dollar. The dollar, the way that some of these metal mining equities are running, it looks like the dollar actually will probably break the 92.50 mark. And if the dollar breaks 92.50, it's going to be at 88 bucks, and you know, you'll see these commodities, not just gold and silver. You're going to see commodities in general basically take off. because the real question is going to be, does it hold that level there? See, the 88.50 was the highs that were generated in 2008, 2009, and 2010. And then, because that's where I expect it's going to go. So we'll see, how this shakes out when we get down into those levels. But I expect the way the market's trading, it looks like it wants to get down into those levels pretty quickly. If we do go over to the XAU and the HUI, what you're going to see, and this is where some real information is going to be gleaned also. The XAU right now is up $4.69. We're approaching the supply line, and this supply line is a very large supply line. Well, if you look at Rango Resources, Rango sliced through the supply line like no one's business, and so did Franco-Nevada. Well, the way that the XAU is trading right now, it looks like it very well could slice through it too. And if it slices through it, man, this thing's going to run big time, because there's not the resistance is from the 82 area, getting up to the 112. There's no resistance after that to about 145. So, and that where that's coming from, folks, is that when the gold and silver, dropped out of bed, it traded sideways from June of 2013 all the way over to September of 2014. So that supply line is a large supply line. The real question is, how is it going to hit it, and is it going to eat it, and eat it very quickly? And eating it very quickly would mean that the volume characteristic, there's going to be plenty of people that just want to get their money back at that point. They've been hanging on for 3 years. They want to get their money back. And then there's other people that basically, if there's more buyers than there's sellers right there, bottom line, then that's what happened in Rango Resources and Franco-Nevada. Let's go to Rick in Chicago. Hey, Rick, what's going on?
Hey, not much, Tom. We finally had a real nice day here yesterday. I woke up, it was 70 degrees in the morning.
How cool was that? Nice.
It was great. It reminds me of when I used to live in Florida.
I bet.
Clearwater, by the way.
Nice.
It used to be just like that. But the real reason I'm calling is because I couldn't help noticing something's going on with this ETF, KOL. K as in kite, O as in Oscar, L as in lion.
Okay. So let's take...
Is this for real, or...
So watch this, folks. This gets interesting, okay? So inside, this is the Market Vectors Coal ETF. And I'm spelling coal, C-O-A-L. So you're hearing that correctly. And as Rick is saying, is this for real? Because it's going up, okay? Yep. So this is what it says. The exchange-traded fund that seeks investment that correspond to the Market Vectors Global Coal Index. The funds constitute global exposure to equity securities in the energy, industrial, and material sectors, which are weighted based on market capitalization. Now, the weird thing here, there's no doubt, the coal industry is dead, folks, okay? So when you look at this, like, how the heck is this going up? Well, watch this. This gets sick. So when we look at what's in it, I'm saying to myself, okay, man, how is this going up? Well, Teak Resources is the #1 weighting in here, which is 8%. Then you have Horizon, which is 7.6%. Horizon's a big gold company. Teak Resources, okay? This is like wild, man. These ETFs sometimes are just blowing my mind. So Teak Resources, okay, they're into everything. They're into copper, mobiling, gold. They have coal. They're into refining metals. It's intriguing. Anyway, to cut to the chase, okay? KOL. So you can see it's not coal that is going up. This is like kind of illiquid, but it's in an ABC up. That's what it looks like. You got your A is 572. Your B is $2.10. So 940. It's an ABC up to 940, man. That's what it is.
And it's doing it on the strength of other resources other than coal.
Yeah, it's not. This, as I said, your largest weight. I could go through all the rest of them too. I know. So Teak is they're large. Well, here, let's do it this way. I can pull this up fundamentally that quickly, I believe. Let me just to see what takes in. Oh, actually, so Teak, Teak is okay. So this is what they take in. Teak takes in $7.5 billion a year. Out of that, $3 billion is coal, $2.8 billion is zinc, $2.4 billion is copper, and then another $4 billion in assorted energy. So you can see that's only a quarter, right? That's 25%.
Yep.
If we go to, let me just go to Arizona and see what they've been doing lately. 1 second. So the key is you can go through all of these, and I suspect that even though they named it coal, they probably changed the weighting structure. Let me just see this quick.
Well, there's a lot of uranium in Arizona, isn't there?
Yeah, just stay right there. We'll be coming right back. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Give us a call, folks. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with Rick from Chicago, and he called about an ETF KOL. So, I mean, it wants to go a little bit higher, but just know that, bottom line is that, I'm looking at the rest of these. You got Joy Global in there. You got West Shore Terminals, and there's stuff that is associated with coal, but there's plenty of it that is probably associated with moving coal and or some other commodity, and that's why I see it running, Rick.
Yeah, that's kind of what I figured. I mean, I played it for a little bit and made a little bit of bread off it, but
That's good.
I really didn't trust it. I figured it was a counter trend bounce, and so I got out of it already. But okay, I just wanted to get a little bit more insight into it.
Okay, man. Have a great one. Have a safe one.
By the way, go Cubbies.
There you go. Good luck to them.
Yeah, thanks. They're going to need it.
Hey, listen, you don't know, man. I see the Cubs and the Red Sox. That'd be perfect, man. Be beautiful.
That would be my dream.
That'd be sick, wouldn't it? I know. Seriously, man. Seriously.
You know, it so would be.
Yeah, big time.
You know.
Okay, man. Have a great one. Thanks.
Yeah, well, we should be okay as long as we don't lose another Kyle Schwarber. I think we'll be okay.
Totally. Have a great one, man. Let's go to Jim in Minneapolis. Hey, Jim, what's going on?
Hey, Tom.
How you doing, man?
Well, I'm doing great. I'm just riding the surfboard on these silver stocks.
It's pretty intense, no doubt, right?
Yeah, it really is. A question for I just say your experience in the both the gold and the silver equities versus the physical contract. You know how they took off before the physical took off. Do you see that happening with the equities rolling over before the physical? Does that typically happen?
No. It doesn't. No. Yeah, when it goes, it all goes, man. It is a great question, man. Because what tends to happen. I mean, I can tell you what I'm doing. Okay, so
I've got Hecla and Silver Wheaton are my two silver positions, and they're both ripping today.
So when you take a look at Hecla, man, that's a beautiful thing, man. Look at that, up 55 cents. You get a monster on your hands. Let's see. So these silvers, some of these, pull us back. It looks to me like, see, this is beautiful. See, this is what you have now. Hecla's a great example of it, man. This is a trip, folks, okay? The supply line that I was talking about, right? The first ones that went through it were Rango Resources, which is the symbol GOLD, and Franco-Nevada, which is FNV. And that gave us an indication that it might rip by it. Well, guess what? Hecla just ripped by it, and Hecla's at 392, man. And this is saying that, guess what? Hecla can run to 550, man. And it might just go a straight line, man. Can drive everyone right up a wall. So don't sell it, man. Don't sell it right now.
No, I'm sitting tight.
No, go ahead. Sorry.
I'm just going to make an observation on a different topic, but
go ahead.
The real estate market up in the Minneapolis area, the houses 2 to 250 kind of area.
Yeah.
They're now writing contingent offers, but the seller is contingent, so they're taking offers, but contingent on them getting another home to buy.
That's interesting, right?
Yeah.
It makes sense. Listen, the rates are low, and the bottom line is that
Well, the inventories in that kind of are low in that kind of price range for a lot of first-time buyers, maybe a little above that area, and multiple offers, and it is fast and furious in the just from what I'm hearing from the real estate.
And so watch what you have, folks. Okay, there's more millenniums than there were baby boomers, and what's going to get intriguing here is watching how this shakes out, because the peak right now in millenniums is still only 26 years old. Yep. So you're talking about quite a run here. So this is going to be a supply and demand deal, and a lot of it's going to contingent on where these rates go. It looks like the rates want to stay low, and it's so funny, Jim. There's someone in the den. I know. And they're saying 250 on real estate. There's nothing less than $1 million in Boston.
Yeah, we're not at $600 a foot like Boston.
It's sick, man. It's so funny.
I don't know how did anybody. Yeah, unbelievable.
When I went up there, took a huge amount of pictures because, I remember, my first house in South Boston, I bought it $14,000, which is worth $1 million right now, and that's it's long ago. But the bottom line is that it's got that crazy, these cities are worth a lot of money, man. I don't know how they afford them, but they're worth a lot of money, So.
What are you seeing in Tampa, Clearwater? Are you still able to get stuff for your fund?
St. Pete's on fire. It's on fire beyond belief. I mean, it's another Boston, and it's just starting.
They're building that big 42-story tower with the hotel in it.
It's just amazing, and it's actually the bones are. It has more bones than Boston has. It has 30 blocks with 10 blocks on each side. It's on fire, man. And it's still very affordable. And there's plenty of jobs in here, and there's plenty of money, and there's big money, there's small money, and there's medium money, and and people want to live there. So it's
and it's warm.
And it's warm.
Yeah.
And it's diverse. The diversity in St. Pete is phenomenal, man. I mean, it's a real deal. People say I'd like to live in a diverse place, and this is a real deal. And it's so cool, man. It's amazing.
No, that's awesome. I love that whole area. We go down to Anna Marie Island, and I think next year when I come down, or I'll probably be before that, but spend more time, around where you're at, Clearwater, Tampa.
Yeah, but you're in a beautiful place. Anna Marie is amazing, man. There's no doubt. That's
gorgeous.
Yeah,
there was not really much of a real estate recession on the island there. That's for sure.
Yeah, there's not much there. No, I know. It's gorgeous.
Yeah,
cooking, brother.
Beautiful. All right, thanks, Tom.
Have a great one. Have a safe one. Let's go to Marie in Erie, Pennsylvania. Hey, Marie, what's going on?
Hey, not too much.
How you doing?
I love hearing about that real estate.
I know. Seriously, you own half of it.
Not much. No.
It is a trip, though. There's no doubt. It's pretty wild.
I'm in this TROV.
Okay.
And I didn't like the way it's acting, and I was wondering what you thought.
Let's take a look. So it's an applied genomics company, so with DNA, right? The company's developing non-invasive testing technologies for infectious diseases. The low is $2.80. The high's $13. Well, I see what it's okay. Let me pull this back a bit. Okay. So put this on a monthly. It actually looks like it can go up to like $8.58, but let me see this thing. Where I think, what's happening now, Marie, right, is that, you're going to hear from me, like, I just flipped from being a bull to a bear. So
right.
It's a market deal that, could, this, when I look at it on a weekly, it says, okay, $8.58 it could test. But my take, it's already happening in the NDX 100. It looks to me like that NDX 100 will start leading us down.
Well, I thought it started to look like this was flipping back the other way.
Well, it's testing on a weekly right now. It's 3.3 million, 1.1. It's not going to have enough volume, well, it's only Tuesday, so, you could maybe... It'd be prudent, basically, to take your bread and run. That'd be the prudent thing to do, because that $2.80 is still a high volume low. That's what that is. It got under the $2.91 when it hit $2.80, so that can get hit. Okay, have a great one. Have a safe one. Stay right there, folks. Come right back.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all Taz Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the Taz Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the Taz Profile Scanner Plus at the front page of TFNN.com. The Taz Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the Taz Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's take a look at inside the indices and see what we have happening. Strength versus the weakness. So the strength inside the Dow, Goldman Sachs. Goldman Sachs is trading up 345. United Health is number 2, up 271. You have DuPont up $1.11, and JP Morgan is up 107. Taken away from it on the way down, you have Big Blue down 859 with monster volume coming in. Home Depot is down 138. You get Visa down 53 cents, and Apple is down 52 cents. Inside the NDX 100, what do we have? Vodafone is the leader out here. That's up 90 cents at $33.80. You have Sirius XM is up 8 cents at $3.93. Dish is up 89 cents, and Facebook is up $1.99. Taken away from it on the way down. You talk about getting a little destruction going. Man, oh, man. Alumina is down $41 at $136. Netflix is down $13.59 at $94. And let's go back to alumina for a second and take a look at this, how it's backing down. So you talk about volume. So alumina dropped out of bed. You know, it's trading at 178 yesterday. It's at 136 now. We put this on a weekly, and if you want to see high volume highs or lows that want to get hit, this happens to be a high volume low. So the high volume low, folks, is $130. It's been sticking out like a sore thumb. You know, this thing came off a high at $242. Goes straight down, has a high volume low at 130, does a counter trend bounce up to 196, comes back down to 130.45. That's where it's sick, man. Unbelievable. Does a counter trend bounce again. Now watch this, the counter trend bounce. So you can see on a weekly, it was 1.6 million last week, still going against 5.4 million. Watch this. This gets really sick. 177.20. Okay, it didn't make it. It made 176.49 last week. So it didn't make 176.20, 177.20. That would have been a test with a failure. Bottom line is that you can see what's happening. Now, this very well could be a monster ABC structure on the way down. Let me pull this back a little bit more. Yeah, this is in trouble. And if this breaks that $1.30, then see ya. I mean, big time. Then it's the $35 stock. The Netflix, NFLX. Let's go take a look at Netflix. Netflix is down on 51 million shares. You're down $13. And this also is going after 2 high-volume swing lows at $85. Let's put this on a monthly. Yeah, that's where it's going. You know, we'll see how it handles that high-volume swing low. It's $79.95. That's where that baby's going after. You break that down, and then you'd be down into somewhere about the $55 level. Let's go over to Amazon, because I suspect what's real possible here is that Amazon may be hitting into them with subscriptions. Amazon right now is trading down $7.50. You're at $627. The numbers come out on Amazon on the 28th. You talk about being right in the middle of earnings season. It's gonna accelerate pretty dramatically right from here on in. And you know what? Amazon, last time we come out with numbers, we went from $696 down to $474. Amazon's been climbing higher with lighter volume. You know, last week we had 15 million shares going against 33 million. When these numbers start coming out, it's going to be pretty wild. Google. Let's go to Google and take a look at Google. Now, this is subtle. So Google's down $12, which is not a lot. What you have, though, is that you do have a slight expansion of volume. We'll see what Google ends up doing. It's got about, 10, 15 minutes left. Google just got back inside. Let's see. No, not yet. So we're at 753. We'd have to get back inside 752 to get back inside its lower range. But you can see what Google has done. Last week, you did 1.5 million shares on a weekly. Well, you're going against 6.1 million shares. Those types of numbers, folks, that type of contraction, that supply line is a monster, man. That's where the operators are getting out. It crawls back up there. They're pleading, please stay up here for a week or 2 weeks so we can just keep pushing product out, because that's where when you've already come down on volume, you come all the way back up with lighter volume, that supply line is absolutely huge. And what tends to happen, of course, is that when you're talking a stock that is $754, just figure it out. Every 10 shares is $7,500, okay? Bottom line, they want to get out of that stock so fast they can't see straight, because that's when there's a huge difference in the context of percentage-wise versus amount of money that goes to your top line or bottom line. It gets out of whack in a huge way, too, not in a small way. As we come to the close out here, let's go take a look at the NDX 100, because what I expect we're going to see here, and this will be interesting because they're trying to hold the market up, but you get 12 minutes. It looks, I suspect this thing's going to sell off coming into the close. They try to hold it up once. We'll see if they can get it held up again. If we look at the NDX, it's still only down $15, which is not bad, by the way, okay? We were up 28. It's down 15. But we do have that high volume swing low that was generated as soon as I started at 3 o'clock. So you break that one, and guess what? That would get you right down into the 45.17. If we take a look at the E-minis, what you have, the E-minis right now, they're hanging pretty good, actually. They're up 650. They traded as high as 2,098. Yeah, see, they're hanging up there, man. But that has when whoever hit the Nasdaq hit the E-minis at the same time. So that 2,091, it's only $2 down. It is game. You know, we'll see whether they sell that baby off coming into the close. After the close out here, no doubt there's going to be a lot more numbers coming out, and we'll see who can get some juice on the top side or downtown. Let's go over and take a look at the oil market, the XLE. First, we'll look at ExxonMobil, because what we have, ExxonMobil right now is up 33 cents rather. You're at the $86.11, and I believe that's going to be into that November 3rd. Yeah, you're into the November 3rd deal. So the high of that is 87.47. Chevron overtook this morning. Let me see if it's still there. It overtook it, man. Okay. So it's been banging into this November 3rd high, and it overtook it. We're at $100.30 in Chevron. So with that says, now, so check this out. This is where there's going to be some divergence, because that XLE, you know, bottom line, somehow, some way is going to get into this November 3rd swing point. And we're 4 points away from it right now, which is not that much. So what we may see is that you may see the NDX 100, you know, continue low or go sideways. The Nasdaq Composite do the same thing, as the S&P continues higher because some of those oil stocks, and the Dow Industrials continue higher because of some of those oil stocks. You stay right there, folks. We'll be coming right back. Dow Industrials up 47, Nasdaq down 19, S&P's up 7.5. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 36. The Nasdaq's down 22. S&Ps are up 6. And we'll see how these S&Ps react coming into the close, because the S&Ps right now, and the Dow would be the strongest indice. Let's go over to the small caps. So if we go to the small caps and we look at the IWM out here, you have 20 million shares traded out here today. We're up 10 cents. You're going into 39.5 million shares. And, this would have to actually close. This would be two different things happening here. That would be a test of the downdraft from December 31st. That being said, you'd still have to get a close under the $113.39. And realistically, you'd like to actually see it down to $110.83. Because what we've done is this. I've talked many times is that what equities and currencies and commodities like to do is they can get up into the low of a bar, and that's where you can get a test and get a rejection, or it makes it. In this particular case, the small caps, that's exactly what they did this morning. The IWM got to $114.12. The $113.97 was the bottom of that. And bottom line, it backs off. And it's backing off on half the volume. So that's saying that, and that's a supply line. It's a very large supply line, too, by the way. If I bring this back, what you're going to see is that baby is just laid out there in a big way. I mean, the small caps have been going down for quite a while. Look at that. That's pretty wild, actually. You talk about a supply line. This supply line goes back to December of 2013. Yeah, that's where it goes back to. So it's going to take quite a bit to get through that whole line. We're going to take a look at the NQs. Yeah, they're selling these babies off coming into the close. So we'll see what comes NQM6. So when we started at 3 o'clock, that's where it's running into right now. That's that high volume swing at 45.22. You're at 45.28. And if we hit that with juice, let's see. You get, well, the futures don't close to 4.15. But what does happen on a day like today with earnings, this thing can bounce all over the place. A good NQ weighting structure comes out. Bottom line can bounce up. And if it comes out and it's just not strong, guess what? This thing could get taken apart in about 2 seconds. But what we do have out here today, it looks to me like you're going to have the Nasdaq. So, yeah, the Nasdaq is coming down with expansion of volume. So that's very subtle, but that's what you have. The Dow Industrials is going up, and the S&P are going up with lighter volume. So that's actually in harmony for a market that wants to go down, folks. So what you have is this. If you could take a look at it. So the Dow today has reached a higher high. Yep, it reached a higher high. The S&P has reached a higher high. Both of them are going to have lighter volume. The Nasdaq is going to a low, and you have volume expanding. That is harmony in the marketplace. And what's so cool about that, what I always like those types of setups. The reason I like those types of setup is that that's very hard to do. And not just specifically meaning the Q's going down, the index going down, the S&P going up. It doesn't matter which way it happens, whether the S&P was going down with higher volume and the Q's were going up. It is in harmony because what it means is that they're going where they want to go, number one. But guess what? When you're going up on price and there's no one in the store, it doesn't last. It just doesn't last. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming back with some numbers after the close. Lots of earnings coming out. Dow Industrials up 38 right now. Nasdaq's down 24. S&Ps are up 6. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
My call. Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man. Wow. I like it. Totally.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Those who don't believe in magic will never find it. Market-wise, let's take a look at it out here. We have the Dow Industrials up 49, Nasdaq down 19, S&P's up 7.5, gold contract up $17.40, trading at $1,252 an ounce. Silver up 70 cents at $16.96 an ounce. Platinum up $35 at $1,013 an ounce. Copper up 5.5 pennies at $2.22 a pound. Light sweet crude up $1.31, $42.49 a barrel. Bonds, 10-year note down 6 ticks, 130.10. 30-year bond down 11 ticks, 165.01. King dollar down 430 ticks at 94.03. The euro is trading up 49 at $1.13, and the yen is up 32 at 109. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so check it out. This is going to be about as subtle as you can get, man. This is going to be a trip. So, your cash S&P, what do? We went to 2104.05. Well, 2104.27 is the high that was generated out here on December 2nd. Volume-wise, what we did is this. We did volume out here today of 902 million, and that good old December 2nd was 954. So in that context, that's a test of that area. It's a failure on price, failure on volume. You know, we'll see where this thing shakes out, meaning on the S&P. You know, to me, the S&P, yeah, can it hit it again? Yeah, more than likely it can. But that's a failure. Technically, that's a failure. We go to the Dow Industrials. We take a look at the Dow Industrials. Dow Industrials up 49 bucks. Dow Industrials get to 18,053 out here today. Well, no, we got to 18,103. Bottom line is that when you take a look at that number, you know, it looks to me like the Dow can still run to that 137 probably, 18,137. That being said, now both the S&Ps and the Dow, you're up on light volume, okay? Now let's check out the other side. Nasdaq Composite. Composite gives it up with what? Composite starts coming down with an expansion of volume. What we have on the composite is that you have 1.8 billion shares versus 1.6. Not a huge amount, but you have the expansion. Now, that's the composite. Inside the composite, what do you have? Now, this is the leader, the NDX 100. The 3Qs come down with 41 million shares. You know, if we were going through this, bisecting and dissecting this last hour, and what you had is that you can see the expansion of volume. When I started the show at 3 o'clock, we already had 26 million shares traded. They're pushing this out, and they're pushing that out in a big way, folks. And what we had at the close here, if you want to see something, this is quite a trade, too. At the close, looks like 3.3 million shares got sold. I have to add them up, but that's what it looks like. Out of the 41 million, about 8% of that was right at the close out here today. Gold contract. What do we have with gold? Bottom line, you have the wide price spread, you have the accelerated volume, all of the above. We did 208,000 contracts out here today. You're coming into a swing point that I believe had 154. No, it's at the swing point, yeah, at 157,000 contracts. So we're at 1252. I suspect we're going to go after the high swing of 1287, and we'll see whether they get enough juice to get up over it, you know. And if we do, man, this can be a monster ABC up. And this is going to be wild watching this shake out, because your A point on this is 1071 and your B is 1287. So you're talking a couple $100, which will bring you into the 1438 area. And when you do pull this back, it makes sense, because I believe the 1438 is also a swing point. Let me just pull this back and put it on a continuous contract. Excuse me, folks. Yeah, 1428. That's the high of August of 2013. That's where this baby's going. And in fact, if you take this, you know what's pretty cool here too, is if you actually take this and you just see how when we broke with wide price spread accelerated volume, that gave you the swing point that it wanted to go after also, which is the 1428. Right now you're laying out there at 1251. We get into the silver market. Silver, you talk about catching a bid. That caught a monster bid, folks. The silver started about 1:30 Eastern Standard Time last night. It's done 105,000 contracts out here today. up 71 cents. Silver is just going to blow away the $17 area. That baby wants to run up into the $18 area. So, I suspect you're going to get some quick follow-through on this also. Right now, it's $16.95 on the continuous contract. $17.71 is the next stop. And if we take a look at that, what you're going to be, what this is all about. So watch inside the commodity market, what you had out here today. The only commodities that trade quite a bit that were in the red is that you had orange juice down 1.7%, sugar was down 0.7, and cattle was down 0.5. All the other commodities, they were up, and they were up big. Natural gas caught a big bid. Natural gas was up 6.89%. And let's see what we had here, because we were looking at natural gas this morning, and it needed more volume. Let's see whether we got it. Oh, no, that's not coming up right now. Okay, so we get over to take a look at King Dollar. So King Dollar, folks, trading, it did 17,000 contracts. You're at $94.03. The swing point that I suspect we're going to go after, and more likely we're going to go after it tomorrow morning, is the swing low from the 12th of April. That's 96.62. So it's going to be wild watching this, how this shakes out, because this very well is another ABC structure on the way down. Right now, you have one confirmed ABC structure on the way down with a price projection of $92.30. You have the high volume swing low from August 24th was 92.50. That brings your probability much higher that you're going to get down to 92.50. The real kicker is that are you going to hold the 92.50, or is it going to blow it away? And I can tell you, if you're looking at the XAU and the HUI, it's looking to me like it's going to blow it away. Because what you have is that the XAU is coming up to the supply line, and it's slicing right through its supply line, as did Rango Resources in Franco, Nevada. So bottom line, get ready for action. This is Tom O'Brien. This is TFNN. Stay right there. Be coming back with some earnings numbers for you. Dow Industrials finished up 49. Nasdaq down 19. S&P's up 7. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow Industrials finish up 49, Nasdaq down 19, S&P's up 7. And as we do each and every Tuesday at 20 past the second hour, we get our man, Mr. John Logan. Now, don't forget, folks, John kicks us off at TFNN every trading day, 8 o'clock in the morning. So no matter where you are right now, listening in your car, remember that you can get us right on your cell phone. All you do is you go to TFNN.com in the browser, hit Tiger TV. We get phenomenal HD video coming right across. John does a great job every trading day, 8 o'clock in the morning, get you set up for the whole day. He also has a phenomenal piece of software. It's the Taz Profile Scanner. Now, tomorrow night, 5:30 to 6:30, he's going to be doing a webinar right here at TFNN for his subscribers. Well, you can be a subscriber right here, right now, folks. 30 days, money-back guarantee. You like it, you'll pay for it. You don't like it, you don't pay for it. Check it out right in the front page of TFNN. The workshop is from 5:30 to 6:30. He's going to go through not only how this works, but where are the market opportunities. And that's this little piece of software does the job for you in like split seconds. John Logan, what's happening? It does do it in split seconds, man.
I know, but it's awesome the way you say it. How you doing?
I'm doing great, man. Yourself?
Good.
Well,
hey, man,
you should have seen me this morning. So picture this, man. You're on this morning, right? And for some reason on my laptop, I'm having a hard time getting into the den. So it's pretty bad. I gotta watch Tiger TV, and then I get you on the den on my TV, actually. But so I'm going through. Of course, you know, I put my bear suit on a couple days ago, but I hadn't gone shot yet. I'm saying to myself, okay, man.
Thank God.
So I pull up all the ETFs, man. They're all green, and then you know, then I turn around and start looking at Apple. I said, man, you know, I was just looking at one little hint. You know what I mean?
Yeah.
And that one little
takes sometimes. Everybody catches a cold, you know.
Well, and particularly because that weighting structure is so large. You know what I mean? It's not that Apple fell apart today, but you know, we'll see whether the index, you know, gets it going down on the way down.
Exactly. So, I mean, I'll just go ahead and get right into this.
That's a beautiful thing.
Cool. All right, so I know you're going to lean towards this, so I'm going to go ahead and point out. The globe has been happy as far as the equities go lately. I'm showing our scanner right now with the indices heat
Look at
grid.
it. It's all green, man.
I know. On the long term, it is unbelievable. Yep. But as we go into the S&Ps here, where are they at? I've lost them. There they are. We put some more information in lately just to kind of give you more, you know, in a quick glance.
Okay.
Everybody's a millennial. They want it immediately. Yeah. So we gave it to them. So even though we're green and, you know, the breadth has been super positive, almost overextended positive, you know, we've been looking at some inflection points, you know, to pay attention to, even though the breadths have been in concert for a while now. That means the weekly and daily have just been, all the internals have been kind of spinning north here.
Okay.
With not a lot of breakdowns. And we have this top 40 here. So, you know, that gives you a little information. So I'm going to go right into the chart, right from, let me pull it up again, right from the scanner. And as you can see, the daily, you know, these profiles, we talk about them every morning. They're great inflection points to be aware of. And then you can kind of use them on different time frames to predicate some certain situations. And we talk about those every day. But on the weekly, on the long term, the reason I was mentioning this is,
look at that.
You know, the S&Ps have reached the top of the envelope, or the top of the balanced area, so to speak. So, you know, we could bust through. This is extremely scary for the shorts right now, all things considered, everything you've been saying, looking at all these things green. But this definitely is a long-term resting point. We're at the highs, you know, of the move. You know, I hate to say, hey, wow, everything's green and everybody should be buying things, and then they get the high print and we reverse. So we are at something right now to pay attention to. Top of the profile. You don't ignore things like this.
And that's the top of a profile on a weekly, right?
Yes.
Which you take more weight for, right, than a daily. That's for sure, right?
Exactly. And we that leads into another topic, which okay, well, wow, we're here. What do you do? So in the webinar we're doing tomorrow, a lot of times in the morning I'll go, okay, wow, we're pulling back on this. This is a trading opportunity. Okay, this is more of a long-term trend.
Okay.
How do you wrap a strategy around really what I'm talking about in the morning on different plays? And that's what we really want to get into tomorrow. Is this thing will find little nuggets of gold everywhere for you, but then how do you really maximize finding that opportunity in the scanner based on what you're kind of looking for, and,
right.
And how do you trade these short bounces? What strategy do you use? Do you go long the calls? Do you short puts naked? Do you sell the futures and buy a call against it? Do you sell a credit spread below IBM now? I mean, what do you do? So that's kind of what we're going to be really focusing on tomorrow, because in the morning a lot of guys will really get addicted to just playing with the underlying instruments and going long and going short. There's other ways to try to mitigate the risk after you find these opportunities, and that's really, longer term plays, sometimes you don't want to get shaken out of them. So a lot of times those option hedges married to those things are the way to go, and we'll talk about that.
Well, and what you also talk a lot about in the morning, which is really cool, is that you can take a look at the S&P, folks, of course, and we all like going long and short the S&P. Mm-hmm. But when you grind down to the sectors, it's really cool, because if you're going long a sector or an equity in a sector that's stronger and or weaker, that is a much better trade.
Yeah, it's invaluable to really be able to increase the odds by drilling down.
It is.
I mean, you can say it a couple of different ways, but it's increasing your edge, and also trying to mitigate the risk of being wrong. Let's just say the market implodes 500 points tomorrow. Well, if you're in relatively strong stocks where you can play defense at the same time based on some of these profiles, you're not going to get hurt a lot of times. And that's and vice versa. Market has been skying lately. We've been talking about some dogs that just based on the profiles.
And it's cool too, is that the individual stocks and the individual sectors release more information for us.
Right.
Because what happens, folks, of course, is that you get the S&P, which is good, and the larger indices are good, no doubt. But when you break down into the sectors, into the stocks, it's like, okay, the S&P, we heard this a million times, is strong. Okay, what's a weaker sector inside the S&P? Well, your probability, if you're going short, that's where you want to go. And what's so cool right now, John, what I love, is that they're all at highs now. I mean, there's a lot of stuff at highs. You know what I mean?
Yeah, and a lot of people will think, wow, that's not really a very sophisticated strategy. Is, hey, wow, there's some strong stocks and the market's going up, and there's some weak stocks, and it's very easy to see this within the scanner. It will kind of calculate these things for you. In fact, let's just talk about the XLE first, and then we'll move into some stocks that are actually breaking down right now.
Cool.
By definition, that if we're at this inflection point, that weekly unfair high, top of the weekly profile. Somebody asked that question in Den a couple of minutes ago. That is the top of the balanced area. What these balanced areas and what these profiles really are is, people are auctioning the bids and offers. It's a fair auction on the floor or in a marketplace. So we consider the balanced area where the real fair auction is. This is where prices can move around. And I have the bear up here and the bull, and I actually have the shark up here now, Tom, if you can see that. And that shark is swimming around in the balanced area. A lot of things can happen.
That's hilarious, man. Oh, my God.
So we're going to talk about the XLE stocks when we come back.
Awesome. You stay right there, folks. John and I come right back. Now, as we're coming into that break, you can come right over to TFNN. You can sign up for the Taz Profile Scanner. You'll be in the workshop tomorrow night, 5:30 to 6:30. Get a great piece of software, 30-day money-back guarantee, folks. Check it out right in the front page of TFNN. John and I come right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the market-safe commodity solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking with our man, Mr. John Logan. We're talking the markets. We're talking the Taz Profile Scanner Plus. And don't forget, folks, tomorrow night, 5:30 to 6:30, great webinar. It's an hour. You want a piece of software that can bisect and dissect this market. And you know, I know most of us just trade the U.S. markets, but what's so cool, folks, and you know that I do this every morning, I love knowing what's going on in Asia, what's going on in Europe, because it gives you an edge, man. And the bottom line is that this dissects and bisects the whole world. So check it out. And it's pretty wild, man.
Yeah, I mean, you can not only, I mean, we spend really a lot of extra money on the back end driving all the information to give it to you on your desktop from all these,
yes,
you know, the TIE Set 100, the Bovespa. I mean, you can drill into, you know, the TIE Set 100, look at stocks that you've probably never heard of, find opportunities by doing some filters relative to profiles, completely trade these things on technical analysis, which is, you know, I think, you know, a great way to look at trading information, and you know, see how these things work out. I mean, you can always kind of put them on your radar screen, put them in your watch list, you know, and really be more of a kind of a global, you know, watch machine here.
Yeah,
it's
it's a one world deal. That's what's so wild, man. Do you know what I'm saying? You know, and it can lag, you know, lead somewhat, folks, by a couple days. But guess what? We're in a one-way deal here, man. One world deal. You know, it's important to wrap your head around that, man, because that information is out there that you can use, to keep things tight and you're trading.
Yeah, I mean, we have, customers all over the globe that use this, but a lot of times those guys who are in Thailand or in, Germany or whatever, everybody trades the U.S. So it's like, it's really nice that they kind of have their world, but then they get to really watch what's going on in the U.S. with this particular piece of software. And I really think people ought to start doing that inverse relationship a little bit. And, folks here start watching what's going on and, opportunities. You want to, again, increase the odds, increase the data sample set, and just, at least be able to monitor things and see how they work out.
No doubt.
I want to talk about the energy sector for a bit here.
Cool. Okay.
Is that cool with you?
That's a beautiful thing.
All right, man. Your little friend here, Murphy Oil. Have you been looking at that lately?
Yeah.
Okay. Yeah, we have had, and this is on the breakout list today.
Right.
Again, it's kind of breaking out above new daily highs, and this one came down here. You had talked about, in this thing, I think you had started buying it down here, where like
with Murphy, I sold it Friday, but we've got it twice, and we hit it nice twice. Right.
Great. So I wanted to point out that, this particular stock we talked about, I think last week or the week before, had a profile appear below price action, and somebody was talking about that this morning, I believe, with SWN. We were trying to answer that question. We'll come back to it. But, when these little esoteric things happen, we consider this increasing the odds. And when that happens, then you're really, really looking for support to buy, i.e. what I'm showing right now. And then you've also got breakout opportunities. So, we had that happen. We were down here at support again. We come back, we find support again, and we're breaking out again. So we'll have more than likely a new profile happen on this, in the next. Yeah, it's not a lock, but you'll have more opportunities to keep turning the rents the same way. On
you can see,
like this.
You can see, these oil stocks, man. Even the three I sold Friday, they were all up, and one of them's up big. And I got, that C drill I got out of there too. That SDLP, the $4 stock up 70 cents today.
Unbelievable. We've been looking at HP. This hadn't been like barn burner, but this is one again. The setup was awesome.
Look at that, man. Yeah,
we had the profile up here below price action. I'm going to blow it up a little bit here, and comes back, uses it as support, and that's where you can play defense. And then the strategies we'll talk about tomorrow is like, okay, is this a trading opportunity, or is this like where you kind of back the truck up and really wait for that pop? And we'll talk about that tomorrow. This is a long-term setup, and it's powered up from 56 to, good Lord, that really
63. Oh, I know.
My God. Okay. So yeah.
Well, actually, powered up from January is $40, man.
Yeah.
Yeah. I mean,
we've been
look at all that green, man. That's pretty sick.
I know, but what's really cool too is it's telling you a lot of back in the old days. I mean, way back in the old days. I used to look at, wow, this stock is on sale. Maybe this will catch up, and I've found a little gem here. These stocks are down for a reason.
Yes.
And, the scanner will tell you which ones are not, hey, this is probably not the ones to go long. So it identifies those too. So, we always talk about this in the morning. It's like we're trying to block out one side of the marketplace. And on these particular stocks like Valero Energy, NOV, National Oil Well, there's a couple other ones on here.
And you know what's cool, folks? Okay, so I'm going to talk to all you bulls out here right now.
Mm-hmm.
What is really cool is that, so picture something. Markets, never go up forever without retracements, right? When you take the scanner, and let's say that you're a bull just in a sector or whatever, right? And, you got into something, you get out of it, and you just wait there for the 240 to break down, for the 60 to break down, for the daily to break down, and guess what? It's coming back to the weekly. And then you line that up with whatever other reasons you have that you think you want to buy it. It's a crazy deal, because that's what I did on both times on those oil stocks, And
right. No, I remember.
They were the trades were like a good 6 weeks apart, because that's what oil did. Oil went up, pulled back, went up, pulled back, and it was just laying there in the weekly. And what's so cool, folks, is that you don't have to give it any room, because you know where the profile is, and okay, if it breaks underneath that, it's done. Well, guess what? It didn't.
And a lot of times, if it breaks underneath that, what I've kind of been trained to feel, I guess, is that if it breaks some of these lines and starts doing things that are just absolutely against the normal general rules,
yes,
and I'm still in it past my threshold for appetite for risk for stops or whatever, it makes me feel just awful and stupid. And I like that kind of it's almost like Pavlovian. You're like, oh man, well, what the heck am I doing in this? This is telling me not, I don't know. It's very, very helpful to me.
No, you're absolutely right. What it is, folks, it's glaring you right in the face. Okay, so it's not one of these deals that you look at something and say, okay, this is where I should put my stop. This is why I'm going to put my stop there. This thing glares you in the face. Like, okay, if it's underneath there, guess what? It's going to hell in a handbag. and if it's going over the profile, guess what? It's going to heaven, man. So you better close that position, man, because
exactly.
Yeah.
And there's we talked about this morning. There's some stocks to stay away from. I mean, you can kind of manual sort these things to find, hey, good gracious, some of these are just not wanting to get out of their own way. There's some preset canned filters over here that might put some things on your radar screen. But talking about the crude oil trade, when we drill into that XLE sector, we always want to keep crude oil in mind. So crude oil also has these profiles. So when I go into the future section of this, and all these are real-time price derivatives. I mean, you get a lot of cool information without a lot of delays on this.
No doubt. You stay right there, folks.
Okay.
John and I are coming right back. Our phone number is 877-927-6648. Dow finished up 49. Nasdaq down 19. S&P's up 7. John and I are coming right back.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all Taz Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the Taz Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the Taz Profile Scanner Plus at the front page of TFNN.com. The Taz Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the Taz Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We're talking with our man, Mr. John Logan. We're talking the markets out here. And don't forget, every trading day, folks, 8 o'clock in the morning, John kicks us off right here at TFNN. Get them right on your cell phone. So all you folks, whether you're in Boston, whether you're in Denver, whether you're in the West Coast right now in your car listening, in Florida, remember, TFNN.com on your cell phone. Hit Tiger TV. You're going to get audio. You're going to get video. You're going to get this good old boy down in North Carolina.
This week.
I had to do that because in the den, I got to hear this quote. You're going to love this, folks. So one of the Tigers in the den said, I hear John Logan just say, back up that truck. And then, of course, he said, yeah, John's a farmer. And says, they're going to kill each other inside the den right now, folks. They're I'm only kidding, but it's a beautiful thing. Seriously, though, folks, right on your cell phone, TFNN.com, hit Tiger TV. Bottom line, John goes through all the markets. And I want to stay on the farm pitch for a second, right? Okay. Well, you get the dollar index. It was great. But I know you saw that run in commodities today.
Oh, my God.
And the fertilizer stocks, right? I mean, we got action, man.
Oh, God. Man, the weird thing is when crude oil goes up a blip or two, the fertilizer seems to go up. And then when the crude oil ticks down, it doesn't. The fertilizer price doesn't seem to tick down, It's wild. So it seems like the farmer's always getting, the raw end of the deal sometimes when it comes to...
No, I can imagine that, man. Yeah. I can't even... imagine the prices of... Listen, I remember the first commodity run, 2002, the first one I saw, and how fast the fertilizer prices went up.
They really haven't come down that much.
Since then? Oh, my God.
Since oil was at 150. I mean, like it...
That's sick.
You throw fertilizer on the yard, on the garden, whatever, or in the field.
Yeah.
It's all crude. I mean...
Really? That's how that works, huh?
Most of that fertilizer is derived out of crude. I mean, a lot of it.
Okay.
But... I tell you what,
we get the dollar. No, let's go through this dollar. I'm seeing this dollar. I need that profile to break right now. Talk to me about that.
Yeah. So we had I have the scanner charts up right now. The e-signal charts. I probably should get up here. But the dollar, we kind of talked about. Okay, we're in a downtrend. We're below weekly profiles. We looked at these inflection points to whack it again, kind of regulating the trade down. You see it there. You see it there. See it there. Now we've gotten back down to the bottom of the profile on the weekly. I'm just going to pull up our cell structure here.
This is a big thing, man. Okay.
Our cell structure, there's no hints of a new profile attempting to appear here. So on the weekly. So that's something we'll probably talk about a little bit tomorrow. But even as you look at this, it's 31 straight days below profiles here, arrow down. I don't know if this is going to be too supportive down here from just the fact that, we've got still deep red here on the dollar weekly cells. And not a lot of hints at anything, any kind of supply area or demand area, wants to happen. It might be a trading opportunity just to bounce off this area. Again, this would probably be short-lived.
So let me ask you something for a second. Okay, so what I'm looking at, folks, is this. Now, I think the dollar's going to 92.50, folks, okay? So I'm looking for a break of this area. So when you're saying that no profile is coming up, that would actually be good for me, right? If I'm thinking it's going to go lower, right?
Yeah, but, again, tomorrow we're going to, this is a great example. We have come down from 95, basically, from the top of that profile, and now we're down at 93, 91, whatever.
Right.
So, it doesn't have to just do a flush and go right through there. This is an inflection point, bottom of the balanced area like we talked about before.
Right.
The outer limits of the fair auction. We could have a little bit of a display here coming back into the balanced area for a trading opportunity. Might be short-lived, but I tend to agree with you because as we look at the weekly, e-signal charts are a little bit better to show this. Let me bring them up. As we look, here's the dollar on the daily, and here's the weekly. If we look at the weekly, you really don't have anything trying to mitigate this down move on the long-term view.
Okay.
So I would look at that daily as just, okay, and we've talked about this last time we were talking. Sometimes these moves happen just to do it, to kiss these areas and paint the tape properly. I don't know. You know what I mean?
Yeah. No. The cool thing is, whether you're a bull or a bear, it's great knowing that you're right at that area right now. That's what I'm psyched about. Do you know what I'm saying? It's like, okay, man, because I know it's an important area. Because if it does break it, then you get the 92.50. Then it's like, okay, man, it breaks 92.50, man, commodity's going to go to the moon, because then we're going to 88. It's like, oh, really? And
yeah, I want to really talk about that in a minute. I want to expand on what you just said. But that weekly being where it's at, and then the daily just kind of, okay, then it gives you a chance to short it again based on that weekly view, and then the daily inflection point.
Yep.
And now we're looking very heavy. We might have a little bit, we're bouncing slightly off here. This is kind of a micro day trade, but yeah, I mean, it doesn't look good. And that's my question. I have a question for you based on all that. I want to go into the notes because,
yeah,
I mean, the dollar getting weaker should have caused these rates to go a little bit higher. Just forget everything else, just based on that fact alone.
Right.
Okay. And they're not. And, if the dollar flushes again, this is an inverse relationship. These notes go higher, the rates go.
Yes.
Whatever. You know what I mean? These things come down, the rates go higher. So it's interesting how we are really, really holding in there with the market skying like it's doing, the dollar getting hit. What's the deal here? I mean, is it showing itself like, hey, I want to be bought, tremendously bought, or is it just kind of teeing itself up for a massive sell-off?
Well, see, I like how those notes are hit. So when we're looking at this, folks, is that a weekly, the green one I'm looking at, or a daily?
This is a daily.
That's a daily. Okay, so that's a daily. So I'm trying to figure this out myself, okay? So what happens, folks, is that the correlation, as John is just saying, is that, notes and bonds, we're still in a very low interest rate environment. And, the bottom line is that as the market, it went one way. It went straight all the way up, and the notes still wouldn't sell off, okay? And that's unusual, right? What I'm actually thinking, which is going to be really wild, John, to see how this shakes out, it almost looks to me like are these notes just going to lay here, 2 or 3 more months as the dollar gets destroyed. And it would make sense that, if the dollar basically is getting this much lower, notes should be going up because inflation's going to be raging, man.
Exactly.
Yeah,
Yeah.
And I think that the Fed probably, now this is a fundamental deal, folks, but it looks to me like the Fed is just scared to do anything, man, And the market may raise the rates. And if the market raises the rates, then the market will really freak out. Meaning, and that's what I think is actually going to bring the market down, is the raising of rates. And maybe we only have to raise them 0.5%, but the market will go crazy about it. It's a wild card, man. I know.
I'm listening to how we're talking about basically coming off zero. Like that's
right.
The end of the world. I mean, when you step back and think about what you're saying, not you're saying, but what we're saying, a quarter or 0.5 point rise in rates is going to murder the U.S. stock market? I don't think so.
I know. Listen, you know what I have? I'm not going to switch gears here, but what I have real conviction in is that we're an unbelievable commodity bull market. That's what I think's happening, man. And if that's happening, that means inflation's going to rage, man. Just folks, stay with us for a second. John and I are going to be coming right back. Yeah, I mean, that's it. It's just like it's getting printed, man, and it totally makes sense because we've had free money for so long.
There's some things been laying around on the commodity scene that are now just...
They're laying around, baby. They're get their suntan lotion on, grooving. John and I are coming right back.
Okay.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. We're talking with our man, Mr. John Logan. We're talking the Taz Profile Scanner. And Intel did come out with numbers, folks. They didn't make their numbers. Intel closed at $31.60. It's trading at $30.72. And they're going to cut some jobs, man. They're cutting 12,000 jobs, John. That's
ouch.
That's
1,200 or 12,000?
12,000. That's what it says. Intel, the world's biggest maker of semiconductors, says it's going to cut 12,000 jobs, or 11% of its workforce. That's pretty intense. The company said shifting focus to higher growth rates such as chips for data center machines and connected devices. That's insane. That's let me just see. Yeah, they're cutting 10% of its, more than 10%. 12,000. They got 111,000 employees.
Man, for guys out there trading it, we're coming down right into those weekly unfair highs, even this aftermarket scene.
Okay.
And again, this would be one of those short-term trading opportunity situations. I mean, I don't know how this is. Let's see, where are we at right now? Where are we at in Intel right now?
It's trading out after hours at $30.70, so it's down 90 cents.
Okay, yeah, we're right there at weekly unfair highs. Yeah, it's.
So you're gonna have a good show tomorrow morning, man.
Yeah, man. we're gonna have a great webinar, I hope. I think,
totally. And that the webinar, folks, 5:30 to 6:30. And you know, the bottom line is it couldn't be at a better time. You know, we've had 2 to 4 months of just amazing trading. You crash coming out of the gate January 1st. You come all the way back. You do 100% move for move. That's a beautiful thing, man. I mean,
you know, I tell you what. I mean, people have. You know, we've talked about a lot of bullish scenarios, a lot of green, a lot of sectors up. I mean, I just want to go back to the first thing we talked about when I came on today. We are at the top of a weekly profile. I mean, you've got to pay attention to those.
I know.
mean, a lot of these stocks have already, you know, just had really serious moves. You know, we could have some people taking some breaks here.
You know what I'm so happy about, man?
Yeah.
I've been a bear for so long, and then of course I was a bull with coming off the February lows, right?
Yes.
But what's happening between the metals, I'm a bull in a big way. But what's happening now, even when I look at these potash stocks, what happens, folks? You want to dial into these commodities because you can be bearish the market and bullish, a lot of stocks out here, man. I'm looking at these stocks want to move higher, man. And, that's going to be divergence, and it's going to screw people's heads up because they're going to say, no, the indices still are holding up pretty good, because what will happen, folks, if some of these stocks do move higher, you won't go down so fast,
Right. For guys out there who are trading their own portfolios and trying to hedge, I mean, a lot of people can't go short in their IRAs and things like that. And I know there's some get long anti ETFs and things like that, or double, triple bearish, blah blah blah, on the indices. But if you look at, I mean, again, you're going to have some leeway on some points here. But if you look at some of these long-term breadth crossovers,
yes,
we're talking about February. You started kind of nibbling on the long side.
Yeah.
I mean, we had a long-term breadth crossover 19th to the 26th of February that week, and then it's just really not looked back. I actually thought it was overextended maybe about a week ago. I mean, we had only...
And I think it was. That was the first, heads up. We had 2 days of, market came down, and it was subtle, but it came down with heavy volume, and then popped right back up with lighter volume. But that was the first indication, I think, that, guess what? There's going to be some selling here.
Yeah, and the breadth, we're going to talk about that tomorrow, too, and how to factor that into some of these strategies. But, these long-term crossovers... we've talked about some trading opportunities being overextended, but these long-term crossovers for guys out there who are trying to, when to go to cash or things like that.
Sure.
These are very powerful changes of events here.
Right to our website, folks, TFNN.com. You can sign up right here, right now, right on the front. John, thank you so much, man. Have a great one. Have a safe one. Look for the show tomorrow morning, 8 o'clock. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Have a great night. Have a safe night. Looking forward to speaking right back here at 8 o'clock tomorrow morning, folks. Wow! Go get them, folks.